Hello everyone, this is Carbonomics. In light of recent market events, it is becoming increasingly clear that our financial systems are outdated. There's outright fraud occurring in the precious metals and other commodity markets. JP Morgan is waking up to realize that nickel they owned in commodity warehouses was actually rocks. And this isn't even mentioning the London Metals Exchange debacle trying to handle the nickel markets last year, which trading volumes have never recovered from. So trust is dwindling in existing systems as markets have seen extreme levels of volatility since 2020. This video will be about why these events surrounding fraud and volatility continue to occur, and a company that is working on a variety of solutions to the problems the financial industry faces currently. But we'll talk about them later in the video. The most obvious example of market manipulation has been in the precious metals markets, where a variety of financial derivatives, shorting, high-frequency trading, and other tactics are being used to artificially manipulate prices. And as I'd shown you earlier in the intro, we know for a fact this is happening. This isn't speculation or far-fetched conspiracy theories. There are incentives at the highest level in government and large institutions to suppress prices. Just in August, we saw Greg Smith and Michael Nowak convicted of fraud and spoofing in precious metals markets, executive director and managing director at JP Morgan. While there are a few firms being caught in the act, there are plenty of companies doing this that haven't been caught so far. And unfortunately, this is not isolated to the precious metals markets. Just in May of last year, Glencore pled guilty to bribery and price fixing in oil markets, fined $1.1 billion. How can we allow this to go on for so long without noticing? But the icing on top of this inefficient and manipulated cake is what's happening in nickel markets. The London Metals Exchange has been subsequently destroying their credibility as a market operator since we saw the extreme levels of volatility that we had in early 2022. Tsingshan Holding Group, a multi-billion-dollar mining and steelmaking company, had opened a massive short position on nickel prices. As prices skyrocketed, the company was sitting at more than a $10 billion loss. They were on the brink of bankruptcy, and the LME itself was in trouble as well. So, the LME canceled all transactions and suspended trading, infuriating market participants. So furious, in fact, that the LME has been dealing with a variety of investigations and lawsuits ever since. But I really suppose that ends up being par for the course when you get a pile of rocks instead of the nickel you were promised.
That is one big pile.
Ultimately, events like what we've seen over the last few years will continue to occur because the technology the financial industry runs on is significantly outdated. And the commodity markets have a whole host of issues that we'll touch on later in the video. And of course, there have been improvements over time, but an obvious example of this is the financial industry still running on batch processing in many cases. And that's not exactly a shining beacon of cutting-edge technology. So batch processing being where transactions are all processed in groups, typically at the end of the day, instead of in real time. And this is why it takes days for checks to clear. A survey by Bank Director of 138 bank directors and executives found that 45% of respondents said their bank relied on outdated technology. I think there's no better example of just how outdated, or quite frankly, how time-consuming it is going to be to transition many of these legacy systems than this deal the CME made. The CME Group, which is one of the largest commodity exchange groups in the world, signed a deal with Google Cloud about a year and a half ago to fully transition to the cloud. And that contract lasting a decade. And that's insane. And if we scroll down, they list a variety of benefits this transition will bring, which is nice and all, but none of this actually solves the core issues the financial and especially commodity markets face today. Now this is where the company I was teasing earlier on in the video comes into play, a stock I'm personally invested in, Abaxx Technologies. So Abaxx is actually primarily focused on building a commodity exchange of its own in Singapore. So you might wonder how they're going to be innovating the financial sector if they're building the same systems that already exist. Well, there's a great meme from Plains Farmer on co.ca that I really like, and I think it perfectly encapsulates the vision Abaxx's management team has for the future of financial markets. Now, building out a commodity exchange with a variety of high-demand futures contracts acts as kind of a Trojan horse, to introduce new tech to a traditionally technologically lagging sector. JC is Josh Crum, the CEO of the company. ACX is the Abaxx Exchange, and the ID++ tech stack is what the company calls its blockchain and distributed ledger technology. And that's what Abaxx is working on, while the CME is still working on the cloud. I'll speak more on some of what Abaxx is developing under ID++ in a second, but first, Abaxx is focused on solving issues in the commodity market specifically, before addressing larger issues in the financial sector. The way commodity exchange markets have developed over time have caused several key issues. The existing larger players like CME and ICE see slow development times through regulation and shifting priorities. More of a focus on profitability over solving market needs. And why would they need to answer the market? Once a commodity exchange has a benchmark futures contract for a particular commodity, they practically have a monopoly on it through network effects. So the markets suffer because of that. But the primary issue that has risen over time has been the incumbent's primary focus on financially settled futures contracts over those that are physically settled. And when a contract is financially settled, that means there's no possibility for physical delivery of a commodity being traded. This ultimately leads to poor price discovery in commodity markets, so industry players cannot accurately assess how much a commodity is actually worth. If it's all financial, then there's no risk someone would actually take ownership of that commodity. So the price of that futures contract never truly converges to an accurate market price. It's inefficient. This lack of price discovery, coupled with inadequate risk management tools, deprives the markets of the information they need to accurately price and trade commodities. A lack of data is one of the many factors contributing to the insanity that we've seen over the past few years. Abaxx actually experienced a delay in the launch of their exchange due to the markets demanding new risk management solutions. Although the company hasn't gone into full detail on what they added, the company has been in contact with industry players across the commodity space to consult on how best to develop its futures contracts. Trafigura, one of the world's largest commodities traders, the company Abaxx has been in regular contact with, just had the head of the company come out and say that the LME's nickel contract is not fit for purpose, especially calling for reform in the market. Well, it just so happens that one of the first commodity contracts that Abaxx is developing is a nickel contract, along with liquefied natural gas and carbon contracts at the exchange launch. So what is Abaxx working on besides physically settled contracts? Blockchain technology for the digital warehouse receipts that are redeemed for that commodity. When you buy a physically settled futures contract and you accept physical delivery, no one shows up at your house with cases of gold bars. You get a receipt that you can exchange for those gold bars at a warehouse. Well, the current system is pretty ripe for fraud or other issues, as we've seen in recent events. How is there fraud? And especially how can $1.3 million worth of nickel turn out to be rocks? Well, that's because there's no efficient tracking or sufficient accountability yet. Abaxx aims to solve this by developing receipts on Ethereum smart contracts. Or it could be other crypto technology as well, if they needed to pivot for some reason. But going through the blockchain has a variety of advantages.
Then I looked at blockchain for the first time, and to me, it was a solution to a problem of this recording of this commodity trade life cycle transparently, right? It could be shared. It could be used as the neat thing about the chain is that it's immutable and irrefutable. It cannot be amended, right? If you build on a block, you're doing exactly that. It's like Legos. That original block still exists. It can't be erased. It can't go away. So a deal recorded on a blockchain is an electronified contract. It was the logic around securitizing all of the relevant information at a single point in time and held by a single point and entity. It would have to be initially commodity by commodity, but you could still take all of the relevant pieces of a commodity, whether it was source, time, location, price, beneficial owner, date, vintage, weight, all the specifications, purity. Those live in a lot of different places today. Even today, you can put that into a single point in time. And that was really where we began. So we began it with gold. Gold was an easy point to sort of it's the training wheels for us to get blockchain and distributed ledger recording and the first smart contracts. And now we've gone considerably beyond that. Personally, I'm working in carbon, which is a digital asset to begin with, or an intangible asset from a regulatory framework. So that's a system that's got good registries and has frameworks around it, but it's not operated at any central point in time. It's independent, if you want to call it a warehouse. There are independent warehouses that hold these carbon credits, and it's pretty much an OTC market. Trying to bring that into an environmental compliance on a scale or a scalable vision, the blockchain and distributed ledger architectures and smart contract recordings is really going to be revolutionary in this particular instance. But it's applicable across the entire commodity life cycle and into what they're talking like green finance, into the green bond markets.
Another emphasis the company has is on Web 3.0 and decentralized finance. And this is where ID++ comes into play in particular. Web 3.0 is the next stage in the development of the internet, where companies like Facebook own your data in Web 2.0. In Web 3.0, you own your own data yourself. It is trustless and permissionless, meaning you can interact with the network, being the World Wide Web, without needing to go through a third party. With your data stored in multiple locations under your control, it's significantly safer than it being centralized in one location, like it currently is with companies like Facebook. Abaxx is going to introduce decentralized finance to the larger financial community through its necessitated commodity exchange. And currently, market participants do have the option to opt into Abaxx's services or use the traditional exchange infrastructure as well. But products like Abaxx Verifier are available for use if participants want to try it out. Verifier is a decentralized identity and access management application, essentially like a two-factor authentication, where it's more secure than traditional options as well. So this is another reason why forgery will be more complicated when trying to commit fraud where Abaxx is involved. Another product Abaxx has developed is called Abaxx's Drive or Vault. Through decentralized ledger technology, anyone can securely store sensitive private data, documents and digital assets. And this will be truly secure storage. These products, the Abaxx Drive or Vault and the Verifier as well, a lot of these will disrupt companies like Dropbox and Okta, third-party authentication and storage companies. Something interesting Abaxx's CEO, Josh Crum, pointed out on Twitter recently was the acquisition of Ping Identity, which was bought out by Thoma Bravo, a software investment firm, for around $2.8 billion. And that's noteworthy because, as Josh points out, Abaxx Exchange already has all the capabilities of what Ping Identity's tech can do and more. Now, Ping will get a higher valuation at the moment because they were actually generating revenues, but this speaks to the type of upside this technology could bring, if not better, for Abaxx. And with the various assets that Abaxx has on its balance sheet, the iron ore properties, base carbon shares, the valuation of the exchange technology itself, and more, the upside behind ID++ and the possibilities for that technology are currently being valued by the market at zero. The market's not giving this technology any value in its assessment of Abaxx via its market cap. So this is a whole other dimension to Abaxx that isn't being discussed too much, as the primary focus is on the commodity exchange right now. With all this said, nothing that Abaxx is developing would have stopped something like the Silicon Valley Bank collapse. That was just poor risk management on their part, combined with unprecedentedly fast interest rate hikes. Nothing we could have done about that, really. But as I pointed out, Abaxx is developing a variety of solutions for the markets to better account for risks in commodity trading and potential issues surrounding security and access to data in the broader financial markets. All in all, going off of what Ping and other comparable companies have been valued at, the technology Abaxx has just so far, without this side of the business even being the primary focus right now, could be worth billions in just a few years, and potentially even shift the financial industry in a new direction. But yeah, that is going to be the end of the video here. If you want to learn more about Abaxx Technologies, I will link my introductory video to the company in the description below. With several catalysts potentially coming out very soon, and I think it'll be worth your while to check it out if you haven't already. Thanks for watching.